As we reviewed markets over the weekend, a common theme was that we remain in a prove-it-to-me market, meaning the bears are in control until bullish evidence surfaces. Numerous markets saw a potentially bearish candlestick pattern form last week. We will review the charts. The big picture for DeMark indicators gives the bears the edge, but daily exhaustion counts tell us to be prepared for a possible reversal as soon as Tuesday, June 5th, with the emphasis on possible. To switch to full screen mode, use this button on the lower right-hand corner of your video player. Now we're going to quickly scroll through some weekly charts. We had a candlestick pattern last week on numerous indices that leans bearish. It's a bearish setup. I can't emphasize the term setup enough, but it's concerning. It's what's known as a bearish engulfing, and none of them are really textbook bearish engulfings, but the concept still applies. The concept is this is 2 weeks ago, and this somewhat shows some indecision between buyers and sellers, this tail and this wick at the top. They didn't really know what to do 2 weeks ago. This week, this candlestick shows heavy selling pressure within the context of some indecision. This candlestick engulfs this white piece here. An example of it, in terms of the concept, would be here, some indecision here, followed the next week, engulfing the red, a rally ensued. This is just the opposite, potentially. It leans bearish. It's just a setup, just something to be aware of. The DAX here at the low, this is a bullish engulfing indecision, followed by a bullish candlestick. Indecision 2 weeks ago in the present day. Last week, heavy selling engulfing this. It leans bearish. S&P 100 index weekly, similar situation. Russell 2000 ETF, strong selling pressure, indecision, red engulfs white. Similar situation. S&P 500 equal weight, which is of course important because this is indicative somewhat of the total stock market, engulfs the white. Here you can see major indecision. The white the following week is bullish. It engulfs this. We did go higher. Indecision, engulfing, leans bearish. To improve the image quality and make the charts clearer, use this button on the lower right-hand corner of your video player. This is a monthly DeMark chart for VTI, the Vanguard Total Stock Market ETF. DeMark charts come from Market Studies LLC, proprietary indicators and tools. The first thing we want to look at on this chart is the sequential exhaustion count. If you're not familiar with DeMark counts, exhaustion counts or potential reversal points come when you either get a 9, as we got a good signal here in March of 2009, the market went up, or the other combination is a 9 paired with a 13. So this is a sell setup. In some respects, this is the confirmation. Excellent signal there. A little bit hard to see here. We got a 9 sell setup here on the sequential count in May of last year. We're coming back up now. Recently received a 13, and this is still in force because this line, the way that it appears here, this is somewhat of a DeMark stop loss. So we've got a 9 and 13 here on VTI, which is concerning, and it appears that the market has reacted to it. We got a 9 and a 13 here. Market reacted in a negative manner. Also want to look at DeMark resistance levels. This is a resistance level that was established back in 2008. You can see when the market came up here in early 2011, the thin blue line did act as resistance. We did clear above it recently in 2012, but the fact that this line isn't bold like this one is, it's still somewhat subdued and thin, means that this isn't a bullish breakout here. It's more of a head fake in DeMark speak. So this is still good resistance up here, and it appears that it $70.62 on VTI. It acted as resistance in 2011 and held here. And if you pair that with the 9 and 13, it's a little concerning. I also want to look at propulsion targets. This is somewhat noisy here, relatively easy to understand. This would be an upside target, an upside target. These are lower targets, somewhat of the natural rhythm of a market. This dotted green line is what we want to focus on now. This represents somewhat of a demarcation line for momentum. So in DeMark speak, when you go below the green line here, momentum is shifted from bullish momentum to bearish momentum. We dropped rapidly, and then it acted as resistance here, and we came down. Maybe the thing that caught our eye here is we came near this resistance up here, somewhere in the neighborhood of that target, and now we're down near this green line. The momentum demarcation line is what we'll refer to it as. That's not what DeMark calls it. The point there is 64.91. So 64.91 is a good figure to keep in our back pocket for VTI. All things being equal, if we break 64.91, that could be bearish as it was here. Unfortunately, we're early in the month. It becomes more powerful if you break it on a monthly closing basis. But what we have to keep in mind is if we break 64.91, VTI closed last week at 65.60. If we break below this, we could head relatively quickly to 60.93. If that doesn't hold, second target is way down at 48.81 on a monthly chart. Now we're looking at the Vanguard All-World Index, sans the United States, symbol VEU is the ETF. These are DeMark support levels and resistance levels. Just going over this again, this thicker or bolder dashed red line means this is a qualified support break. And in DeMark speak, this is a trend change. We're looking at a weekly chart. This is 2008. This signal worked very, very well. Got a steep downtrend. Conversely, on the way up, this was resistance. You can see it was bolded, much bolder and easier to see than this red line here, let's say. This is a bullish break and a bullish trend change, and you can see again a good signal. Here we got a bearish break, and the market went down, but it reversed relatively quickly. So like all systems, no system is flawless. Here we got a break, not a good sign. We just recently, as of last week, got a qualified bearish break on the weekly chart of VEU. This one worked extremely well in a bearish manner. This one worked extremely well in a bullish manner. Just something to be aware of. All things being equal, it leans bearish. If you want to look for something that's potentially bullish, the weekly combo count here, and again, 9s can signal a reversal here, or a 9 and a 13 can signal a reversal from a probabilistic perspective. We do have a 9 up here, which says we've got a buy setup. The concern is we haven't really responded to it yet, but typically you'll look for a response within 4 bars, and next week will only be the 3rd bar. So there is a reason to think that we could get some type of a 9 reversal, similar to what we saw in 2009, but this qualified bearish break also points to that this count might go all the way from a 9.5 to a 9.13, similar to this, which would mean several more weeks of pain. This is again VEU DeMark chart. We're looking at a daily version. Here's a support break, good signal. This is propulsion potential support. We broke below it last week, but you can see sometimes you break below it briefly. So this still could be potential support here, this line. Some other reasons to be optimistic and ready to buy, at a minimum, to keep an open mind this week. The sequential count is, let me take this wave out of here, on a 9-9, and if you get to a 13, You could get a reversal, so a 9-9 is relatively close to a 9-13. The combo count is on a 9-11, so if you count forward between those two counts, you could get a 13 as early as Tuesday and a second 13 as early as Thursday this week. And as we've mentioned in the past, even if that is quote-unquote a bad signal and we don't get a reversal from either of those 9-13s, then that's indicative of a strong downtrend, and it still gives us good information. So another source of good information is potentially coming in the next 2 to 4 to 5 to 6 trading days. It's a reason to have a shopping list ready and to keep an open mind. For now, everything leans in the bear's direction, but at some point, charts change, and there's some reason to believe that we should at least be ready to pay attention this week. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.